Analysts say new share listings may be expected to open again in late March after meetings of the country's two top political bodies, the National People's Congress and the Chinese People's Political Consultative Conference. Since January, 48 companies have been listed on the China mainland, and 31 of them have seen their prices rise 50% following their IPOs.
Most of the new shares rose substantially. That means we began to solve the problem of overly high issue prices. There is still the issue of how to control unreasonable prices and prevent short selling.
In 2012, the price of 30% of new shares fell below their issue price on the first day of issuing. New regulations issued in December and intending to solve the problem say that brokers offering the top 10% of asking prices for IPO shares will be eliminated from the purchase. The regulations still allow previous shareholders to sell their shares to the public as part of a new IPO issue, however. Chinese drug maker Jiangsu Alsaicon Pharmaceutical Company announced January 9th it would issue 55 million shares at 72.99 yuan per share, with nearly 80% of those shares to be transferred from existing shareholders. The move was halted by the regulator 3 days later. And Beijing Business Today is reporting that similar behavior this year has helped the existing shareholders earn 11 billion yuan, accounting for half of what newly listed companies have raised. Many call for restrictions on such moves, but one analyst says that may not be for the best.
The original shareholders in Google, for instance, account for less than 20% of the company's shares. But they introduced professional managers who brought up the share price from $80 originally to the current figure of more than $1,000. I don't worry about the share transfers. The result may be the companies operating more professionally.
Securities regulators say that there are 694 companies on the waiting list to IPO, including 173 to be listed in Shanghai. Zhang Tao, ICS for CCTV, Shanghai.